personal teacher today, and I'll be taking you on the topic dissolution of partnership in accounting. Now, what do we mean by dissolution of partnership? Dissolution of partnership can be defined as a process by which a partnership business is automatically dissolved or brought to an end by the happenings of events around them, which makes it unlawful for them to carry the business up again. Now, or we can also say that dissolution of partnership can be defined as the coming to an end of the partnership agreement or the breakup of partnership business. What can we even say dissolution means? Dissolution simply means a termination of something when something comes to an end permanently. And things like that bring dissolution about partnership, like settlement of debt, which means when this partnership are owing people or the business is not going on well, the profit is not coming in very well, those type of things can lead to dissolution or the division of cash balance among the partnership, which means when there is a disagreement among the partnership on which person should have the highest profit, and those type of disagreement, the division between them can also bring about the dissolution of partnership, or we can say the disposal of assets, which is the assets in which the business or the firm have acquired all this time, and the disposal of the partners are being at stake about it. So can also bring about the dissolution of partnership. That's all on definition of the dissolution of partnership. Taking you through the reasons, my colleague here, Monsurat, will tell you more about the reasons of dissolution of partnership.
Good day, everyone. My name is Abdurazak Monsurat. Thank you, Precious, for telling us the meaning of dissolution of partnership. Here, I will be telling you the reason of dissolution of partnership. One, we have withdrawal of a partner. When a partner is no longer interested in moving forward with the business, so he or she can withdraw from the business. We have another reason that calls the reason for dissolution of partnership. Retirement of a partner. When a partner reach a certain age in public sector, I mean 60 years, that is, when you get to that age, you can automatically retire, or it can be determined by how many years spent in the form of business. We have another reason here again, insanity of a partner. When a partner is mentally unstable, it can also cause the dissolution of partnership. When a partner died, it could cause the dissolution of the partnership. Bankruptcy. This simply means when the company runs into debt or they don't have financial capability to run the business, the partner have the right to exit the business. So that means the business is going to run down automatically. It will not exit again. Thank you. Mariam will be taking you the rules of dissolution of partnership.
My name is Abdulhamid Miriam. Thank you, Masura, for telling us the reasons for dissolution of partnership. To tell you guys about the rules of distribution of assets. The assets are disposal of and the proceeds are applied in discharging the liabilities of the partnership. Section 44 of the Partnership Act states that the subject of agreements are as follows. Losses must be paid out of capital. This is that the capital for the next business will be used in place of the loss incurred in the previous business. And we also have payment of debt or liability to outside creditors. When company purchase goods or services or items on a credit, it's a must for the company to repay back, because it is a debt which you must repay back and which is a must. And we also have payment of partners loan. Section 44 of the Partnership Act says that when we are about to start the business, maybe due to one or two reasons, the company or the partner must have a reason to get a loan, and maybe there will be a due time to pay the loan back. Due to some reason, you have to pay back. We also have investment of partner capital. In setting up a business, there must be an agreed amount stated as to be contributed. And the last part, any profit of the realization must be divided in their profit sharing ratio, which is maybe the profit ratio must be like 2:3:4. It depends on how they agreed it before they start the business, and that would be divided by 100 and be multiplied by the amount they make during the business. Thank you. Koya will tell us more about realization accounts.
Good morning, class. My name is Alistan Justice Dissolution of Partnership. So I'll be taking you through realization of accounts, which is still under dissolution of partnership. What is realization of accounts? Realization of accounts is used to keep records of transactions arising dissolution. It is prepared to close all assets and liability which exists the date of dissolution. I hope you understand that. All assets and liability that we have at hand at the date of dissolution. And what causes dissolution? You've been taught. Like the business is stopping indefinitely. So anything we have at hand, we use the realization account to take note of them. At this point, both creditors, both supplier we are owing and those debtors are owing us, we have to settle, and every profit or loss at the end of the transaction, at the end of the will be settled based on the partnership sharing ratio. We have the format displayed on the screen. Note, in every account you are to open, the title of the account is very much important. Here we have realization account. We have our table. We have the debit side and we have the credit side. On the debit side of the table, you have to register the book value of an asset. The book value of an asset. Here we have the debtors, we have furnitures and fittings, we have plant and machinery, cost of liquidation, and this same debit side, you put in the share profits, the rate at which they share their profits in the firm among the partners. It will be there. Then don't forget the rule of double entry. In every debit entry, there must be a corresponding credit entry. Note. Moving back to the credit side, the other side of the table. The credit side of the table. That is where we have the cash realized from the sale. Note. All assets and liabilities at the realization account will be sold and shared based on their sharing profit.
Good day, everyone. My name is Abu Lester. Thank you, Rikoyat, for telling us about realization accounts and for explaining the format to us. I'll be taking us through the entries of realization accounts, which is dissolution of partnership. And the first step is we have to open a realization account, credit assets account. Then the next step to go about that is when assets are being sold, because definitely if a partnership is going to come to an end, there will be a need for us to dissolve our assets. So when assets are being sold, that is when assets are being dissolved, how do we enter into our account? We debit realization account, we debit our cash or bank account, and we credit our realization account.
My name is Absalam Adiola. Thank you, Esther, for taking us through the accounting entry of dissolution of partner. I'll continue from where she stopped, and I'll be taking the last part of the topic. When there is a discount received from creditor, you debit the credit account, then you credit the realization account. When we have a payoff loan due to a partner, we debit the loan account, then you credit the bank or cash. If you also have a loss on realization, we debit the capital account, then we credit the realization account. Then the balance of the realization account will be transferred to the capital account in their profit sharing ratio. If any partner capital show a debit balance, he or she must bring in cash to the amount of the deficiency. Finally, the cash balance must be be equal to the total standing in the capital account of the partners. Thank you.